Hi guys, welcome back to another video. In today's video we're going over the current market outlook and really sentiment in the market. I do this every single week. If you go on my channel you'll see a bunch of weekly sort of forecasts, and I like to do this for myself and for you guys, so then everyone can improve their sort of ability at reading fundamental analysis and reading price action and technicals and everything really going into the next week, because as a swing trader it's so important that you have some sort of forecast going into the week. So anyway, it's Monday. I'm actually in 3 trades at the moment, which is kind of crazy. I'm in AUD CAD, which is just here. Literally just entered. We're seeing a little bit of pressure off the start here, but the reason I entered this trade was because CAD had lower than expected inflation figures, which is obviously going to put more of a sort of interest rate lowering environment for central banks. So that's quite interesting. If we go to the interest rate probabilities thing, we can see that the Canada at the moment is wanting to lower their rates, and we're getting a 10% cut priced into the market, which is pretty cool to see. And we've got quite low rates anyway at 2.25%. But the 12-month outlook is that we've actually got a rate hike. But the short-term thing is what we care about, as we are sort of 1 to 2 week swing traders. So yeah, and the other thing I'm looking at is pound CAD and pound CAD as well. I've just entered in here. It's looking around break even at the moment. And the last position I'm in at the moment is Bitcoin. I literally hardly ever trade Bitcoin, but I thought we had quite a nice level here. We nearly got stopped out on this trade, but we managed to hold some support at the lows here, and we're around break even as well at the moment. But the reason I sort of entered this trade was because we came to this daily level, and we managed to break past this daily trend line, downward trend line, and we managed to go above the, if you can see here, at these levels, we did manage to go above, but we didn't manage to find support. Here we did manage to find support as we went above the 50 EMA, and now we're heading up to 200, I believe, which is where I could go to put my targets in the future. But on the 4 hour, you can just see we're holding this 50 EMA pretty nicely. So even if we do sort of find a bit of a breakout here, we can continue to see support, and go to the upside, which is what I'm really looking at with this sort of short-term risk on sentiment, which is what I'm going to go into now, the risk sentiment in the market. So TradeSave, the thing I use, the software I use for my fundamental analysis, is currently saying we have a risk on sentiment in the market. We're seeing a bit of a neutral reading. It's a bit nearer the side, but we can still see, it's above this sort of 0%. We are more in a risk on territory. We're not super risk on. We've obviously got the overarching theme of the war, so we're not going to see risk on sentiment all the way up here. But if we look closer into the market, this is what I'm personally seeing. If we start with the VIX has been lowering, right? What does the VIX tell you? Well, it tells you that investors aren't, when we got a high risk, you're seeing high fear in the market, because investors are expecting high volatility, right? When we're up here, this is where investors find high probability. I think there is high probability, and they were correct, right? If we go to the S&P on the 6th of April, when they were at 30 score here on the VIX index, volatility index of the S&P500, look what happens around the 6th of April. Bang, we get high volatility into the market. This is fear of investors thinking there's going to be large swing moves in the market, right? But when we have a VIX that's super low, investors aren't thinking there's going to be large reactions. Yes, we did get a bit of a jump up today over the weekend, but on the S&P 500, we're following this theme of markets gapping down and then filling this gap straight away. It's the same thing we've had here this weekend, where we had some bad news coming over the weekend. We gapped down and then we filled the gap immediately, because we're seeing strong sentiment of investors in the market. They're very optimistic, and they think that the ceasefire will happen, etc., etc., and etc. And whether the ceasefire happens or not, we just got to trade what's in front of us, right? So we see sort of weak dollar coming into the morning. We're seeing that safe havens aren't really being found in things like gold either, as this is sort of trickling around. It's not really going anywhere. So you're not really seeing any fight or flight to safe havens from investors. You're seeing DXY lower. We're seeing S&P 500 increase. We're seeing UJ continue to struggle, which is just telling me right now the risk on sentiment is pretty clear from the market. You know, in the short term, this is what I need to add to. It's all about adding context. So yes, we can see we have a plus 11 score on the on our risk sentiment, but that doesn't mean, you know, that that's what's going to happen for the next 2 weeks. This is just the current market conditions and analyzing the charts right now. Okay, so as we analyze the charts today, we're in a risk on sentiment. So for day traders looking for trades who use risk on sentiment, you should be trading risk on pairs, right? You should be trading S&P. You should be trading dollar shorts. You know, you should be trading, you know, AUD longs, because that's a risk on currency. So that's what I mean by this. You know, we still see oil elevated. We did see a gap up in the weekend, which was interesting, but you know, the strait is still shut. From my knowledge, you know, by the end of this video, maybe it's open, because it's so volatile at the moment what the news is coming out with. So I have to preface this, that, you know, adding market context and understanding that you need to understand more than just, you know, charts on a screen. You need to understand the overarching geopolitics as well when you're taking swing trades. That's super important. You know, yes, yields are going down. That's obviously a risk on, you know, a risk on factor, right? As we see here, easier conditions because inflation is possibly coming down for yields, right? So that's obviously risk on. When inflation's going up, that means there's tighter financial conditions for people. But right now we're lowering, so that's adding to the risk on sentiment. You know, all the things that I monitor is really telling me we're in a risk on environment. But like I say, that does not mean for the rest of the month we're going to be risk on. You just got to, you know, manage your trades accordingly based on what geopolitics comes out, and monitor your trades, you know. So yes, that's really the main thing I wanted to speak about in today's video. But in terms of any other setups, you know, going into the setups I'm in is the reason I took this trade. Obviously we had a breaker retest, we had this level finding support at the 200 EMA, which is a beautiful sign for me. And you know, we can clearly see we're in an upward trend. You know, I like to trade trending markets. It's quite important for me in my strategy. I only have edge in a trending market. You know, I'd love to see things like GJ here come down to this beautiful level. You know, there's a lot of pound sort of recent weakness, which I think we could find strength at. So things like pound USD, this is a level I have marked out, which has managed to find support as well. I didn't manage to get in this trade myself, but it looks quite nice from that level there. But you know, some of the euro pairs are also starting to gain some strength again. Euro JPY looking quite nice, and Euro NZD is sort of struggling here to break out either to the upside or the downside, with the two EMAs, you know, into this like this channel that is sideways, telling me that we're in obviously a sideways market. So I don't really like to trade sideways markets. And we've also got NZD CPI coming out later, so I didn't really want to get in that trade. But we have a lot of red folder coming up. We'll just refresh this to see if there's any more news which hasn't come out. But CAD, obviously CPI came down lower than expected, which is obviously good for our trades. And we got a lot of red folder, so just be careful trading anything coming up. But yeah, that's all for the rest for this video. Hope you guys enjoyed it. If you did, smash the like button and subscribe, and I'll see you in the next one. But thank you.